Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr at the Gold and Silver Club. So during today's session, we will be covering live market analysis. We will go through a watch list of trading opportunities, a forecast of where we expect gold, silver and oil to be heading next. It is perfect timing at the moment to be on this session. Right now, gold is breaking out, silver is breaking out, and oil is breaking out as well. So lots to cover with you today, guys. During the session, we, as always, will encourage any questions, contributions. Feel free to put those into the chat. Any questions at all, any contributions are always welcome. So just before we get started and before we go over to the charts, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For further information on the Gold and Silver Club and our expertise, please visit www.thegoldandsilverclub.com. Okay, so before we get into it, quickly go over the week relative performance so far up until today, as of approximately about 12 o'clock London time today. This is how the markets were looking and how they've performed so far this week. So what do you need to take stock of here? Well, essentially, some of the biggest movers this week have certainly been oil. Brent crude oil, WTI crude oil, both up over 3% this week. We've seen quite a big rebound after they dropped over 7% last week. So we've seen that snapback in price over the course of this week. We've also seen silver has gained some strength, certainly over the last couple of days. It's just about up on the week, 0.5% at the moment. We'll also have a look at gold, which is around about 0.14% up at the moment, so we'll certainly take a look at that. Also note the S&P 500 is down about 0.5% this week. The Dow Jones is down 0.5% as well. So what we're seeing in the markets is a potential correction brewing in some of the equity markets, especially after we saw them break out to all-time highs at the beginning of the week off the back of the Emmanuel Macron, him getting the vote for the French election and winning the French election. With that, we saw a lot of moves priced into the market, into the close on Friday. For the most part this week, we've just seen profit taking and also traders just fading that move, taking advantage of a potential sell-off as well. So we'll have a look at that very shortly too. So I think that's it in terms of the major movers this week. We'll look at the charts as well. And we've just had the core CPI data come through, the core retail sales as well. That's all been relatively negative. And with that, we've just seen a breakout on gold. It's broken out about 50 points. Silver also has broken out as well. It's currently trading about $16.47 at the moment. So we have seen certainly some impact, and the US dollar has sold off. And right now, the S&P is sitting around 2,392, which we'll have a look at very shortly. The next major movers in terms of news items, we could see some volatility on the Michigan consumer expectations, which is coming out to 3 o'clock. Not as big impact as the core retail sales and the core CPI numbers, which have been negative, but we could see some volatility on that. We've also got another FOMC member speaking later on today at 5:30 London time too. And then we have the Baker Hughes oil rig count as well, which is going to be at 6 o'clock London time. So anybody trading oil, make sure that you are aware of that, because that can cause some volatility in oil. What we're seeing is the oil rig count currently sits at 15-week highs. So more oil rigs, essentially, which are on that count, creates more supply. And what we can see, if that number increases again, often it can cause a bit of volatility for oil, potentially a sell-off, unless the number has decreased, in which case it could create a further upside for oil. It's bouncing back at the moment. So we'll look at that on the chart shortly too. Just to make you aware, in terms of major news items, we've now got through the French elections. So there's been a lot of opportunities around the French elections, the first round, the second round. So that is now in the past. So what do we need to look at moving forward? Well, this month, definitely for oil traders, you want to have the OPEC meeting in your calendar. The OPEC meeting is going to be on Thursday, the 25th of April. So do make sure you've got that in the calendar. Also, we are doing a special webinar as well on the 23rd of May, which you can catch if you go over to the webinars on binary.com, which will be talking about the OPEC meeting as well, some preparation for that on Thursday too. So if you're interested in that, you want to trade oil, make sure you go across to that. Okay, so that will be just under the webinars tab, and that's on the 23rd of May. And the actual OPEC meeting, which is in Austria, Vienna, is going to be on Thursday the 25th of May. Okay, so it's only really a couple of weeks away, essentially just under 2 weeks away. And as we go into June, we've of course got the UK election, so certainly that's going to cause some volatility on the UK election, more notably of course the pound, the FTSE potentially as well. We'll be watching that closely as we get closer to that. The FOMC meeting, which you need to have on your diary, as well, if you've got your schedule, if you've got your phones on you, I would definitely have this. I'm sure you've got it already, but if not in your diary, this will cause big moves in the market on Wednesday, the 14th of June. There are 8 FOMC statements per year, but only 4 of them have a press conference afterwards. And this is one which is expected, the Fed are expected to go ahead and increase interest rates on Wednesday, the 14th of June. So that is definitely one for your diary. There'll be some good trading opportunities off the back of that as well. We've also got the ECB meeting too, which is going to be occurring in June, Thursday, the 8th of June. So that's what we've got coming up. Ultimately within the next couple of months as we transition into May and June, and then as we transition in July, August, September, there's a number of other news items coming up. The next elections in Europe will be the German elections in August, okay? So just to put that on your radar. Right, what we'll do, guys, we'll have a look at the charts very shortly. As I mentioned, we've just seen gold and silver breaking out at the moment. Oil has also had a bit of a surge here as well. We'll have a look at these markets very shortly. We'll talk you through 2 types of trade here. So we look at the higher and lower, or the up and down type of trade on binary.com. Very simply, it's very straightforward, this sort of trade. All you need to really get right is the direction and the time frame as well. So essentially, let's say, for example, you're looking at gold to go higher today. You would go for an up or down trade. You do start time now, duration, for example, 5 hours. So be in and out of this trade in 5 hours time, essentially by the close in 5 hours. And then you would put in the amount that you wish to get payout, so that you would know what your upfront deposit is on the trade. So you've got that on the right here. You can see purchase, and it will show you essentially what your stake is on the trade, what the payout is, what the return is, all very transparent. So you know what you're risking up front, and you can obviously decide if that is the amount that you want to risk or not, or whether you want to go higher or lower in terms of risk. And it will show you very transparent the payout, the net profit, and so forth. The higher and lower, or up and down, rise and fall type of trade is very straightforward to implement, because that sort of trade easily allows you to take advantage of volatility. You don't need a stop loss, you don't need to take profit, you just need to get the direction right, and you need to come out within the correct time frame. So if you're selling gold, you want to be out by the time the price is lower than your original entry, or if you're buying gold, you want to come out, have the trade expire by the time the price has gone in your direction. Okay, so very straightforward way, and it's a great additional toolbox to your trading. Okay, so with that, we'll go over to the charts. We'll go through live technical analysis and trading. As always, any questions or contributions, do let me know. Hopefully you won't be cut out of any sound at all, and you'll be able to see my screen here. So I'm just going to share my screen, and we'll move it over to gold. Quick check-in, you can still hear me okay, and you can still see the presentation. Okay, fantastic. Thank you, Sharice. So we're on gold here. I've got a few different charts here. Some of the charts are a bit more raw charts, so you can see what is going on. Other charts have got more indicators on, just to go a little bit deeper into the key levels that we're looking at the moment. So right now, gold has had a nice bounce over the last 24 hours. We've actually been consolidating around key support around 1,218 level most of this week. We had a temporary breakdown earlier on this week on Tuesday. Then we saw a reversal actually on the breaking news that the FBI director, James Comey, had been sacked by Donald Trump, and that caused volatility right into the close on Tuesday. We saw a retracement, about 50-point retracement higher. Throughout Wednesday, consolidated, but yesterday was a pivotal day for gold here. It was a day where we got a close back above the previous day's high, high, low, high, close. This gave us a signal actually for a buy our side here as well. So we're currently in a long on gold, and we've been triggered into this, and we're currently moving pretty well. It's broken out to the daily highs here off the back of the retail sales, which have just come out about 40 minutes ago. So we've seen a pop higher here. Currently it's trading at 1,230, 1,230 US dollars per ounce here. It's been quite a big downward trend recently, and we took advantage of this sell-off last week off the back of the FOMC statement, which essentially confirmed that the Fed were in a stronger position. They were happy with the economy in terms of interest rates. They are in a position to increase interest rates. They signaled that they would be in a strong position to continue with gradual interest rates this year, and it looks like they are going to go ahead and increase interest rates on. There's a 90% chance they will do so at the moment on the 14th of June FOMC statement. So that starts getting priced into the market. So the US dollar was rallying. We saw gold, silver sell off considerably. They kept breaking down. Here, that was, I'll show you on a raw chart, that was the biggest one-day move here for gold since November. Big move down since this breakdown in price going back to the US elections, so this big breakdown here. So we've essentially seen that big move lower, but we've come also down to a major underlying trend channel here for gold. So you can see it's retracing at the moment. You've got 1, 2, 3 bounces at this zone, getting a retracement right now. Now, for the time being, I'm looking for follow-through today. And in the short term, I would consider a little bit more follow-through up towards around the 1240 zone. That's what I'm looking at right now. Now, I wouldn't discount the potential to sell into rallies as well, but I think at the moment we're due a bounce to the upside for gold. I'm looking for momentum to the upside right now and possibly more follow-through next week as well. And then we'll see what happens. We're going to have some good trading opportunities, I suspect, between now and the end of May on gold. Either if it keeps breaking out and following through, we could look at the potential for more follow-through, break back above the 1240 zone, and then gold will have more upside. If it just breaks out and comes into too much overhead resistance around the 1240 to 1245 zone, and we produce some sort of rejection candle around that level, we would look at maybe even a sell short opportunity, selling it back down again. But that would depend also on US dollar strength as well, and where we are just relative to overbought and oversold conditions. So remember, the US dollar index, the way that we trade gold, it's basically priced in US dollars. So if the US dollar is selling off, which is doing at the moment, it's had quite a hard sell-off so far today, gold will go up, priced in US dollars, platinum will go up, silver will go up, palladium will go up. At the moment, this looks like a pullback on the US dollar, although be mindful, if the US dollar comes much lower, back down to the 98 zone, that's key support again, and at that point, if it reverses, it will probably mean that gold and silver will run out of steam to the upside. But at the moment, this sell-off with the US dollar is causing a breakout. Not only the only reason, but it does help the inverse correlation that we're seeing on gold at the moment, this breakout to the upside. So right now, looking for short-term, a bit more momentum. You can see there's a bit of resistance here. I'm looking for gold just to break above 1,200, about 32 to 33 for a run up back towards the 1240 zone above. That's the next major level of resistance. It's got a little bit more work to do, but I suspect it's going to do it today, but we'll see what happens. Silver at the moment also, it registered a buy signal yesterday. We saw this where we had key support here, came back down to also the 76.4 Fibonacci retracement level, which is really key here for the silver market, and we're getting a nice bounce actually at the moment. It's trading at $16.45. If we go over to the weekly chart, you'll see this more clearly. You've got a nice hammer which has formed here, where we've got essentially, this is really important for silver, the 76.4 Fibonacci level. It's important for palladium, platinum, silver. When it gets respected, you can overshoot that level, but if ultimately by the end of the week it closes back above that zone, it can provide support here, and you can see this level is getting supported at the moment. So if we close the week near the weekly highs, rejection candle, you can also just line up your additional trend channels here. You can see it. At the very least, I would expect a retracement here. I'd look for a retracement back towards a 50% Fibonacci level. So that's what I'm looking for short term here, looking for this move to pick up momentum. It's starting to break through some resistance, and I'm looking for more upside basically on silver. Short term here, it's been a pretty dramatic sell-off. It's literally sold off over 75% of the move from the January lows here up until the highs here at the end of April. So it's given back 75% of those gains. And if we look at it on a raw chart here, you can see consecutive, that's been pretty dramatic. You don't really want to be on the wrong side of that sort of trade. Taking advantage of the sell side is quite lucrative. Also, the gold to silver ratio does tend to favor silver over gold short term at the moment, so I'm looking for potentially more upside on silver than gold, but both look good for at least a bounce at the moment. We'll see whether we get more follow through today, whether we can just get above some overhead resistance, but it's building up a base here. You've got a basing formation. We've discussed this previously on the Commodities Corner, where typically Gold or silver, when they peak, they normally reach some sort of capitulation top and they form these big rejection candles, which has been the case on several of these recent sell-offs, and they have a dramatic sell-off. When they bottom out, usually it's not a one-day process. Usually so this wouldn't, for example, be a buying opportunity here. I'll show you on this sort of chart. So this, normally you don't see silver just hit a level, reverse, and then continue after dramatic sell-off. It needs to base out. That basing formation can take a week or two. We had that going back to the end of December as well, more recently this week. So I like this formation. It's been going for about 5 to 6 days now. 1, 2, 3, 4, 5. Yeah, so today is the 6th day. So I like the way that it's been about a week or so of basing, which would then encourage me to look at this for the long side on silver here, because it's been basing for a few days now. And in fact, we've got enough confirmation for a buy on silver at the moment. So I'm looking for more short-term upside. I'm not necessarily saying this is going to be a complete reversal in the overall trend. We've still got the interest rates, which look likely to get hiked as we go into the June FOMC statement. So I don't know how much fuel there'll be behind this rally, but we'll see. Short term, I'm looking for more upside, but I don't know then whether we'll have to just judge it and see what happens with the US dollar as well, whether we just see rallies get sold into. But short term, I could certainly see a pop to the upside here for silver and gold. Also, if we move over to platinum and palladium, platinum has just broken out of this consolidation. So you can see here it's come all the way back down to its swing lows going back to the end of December. The December lows around the 900 level. That's not a bad trade opportunity as well, especially on binary. The reason I say that is because normally platinum is less liquid than the other metals. It's less heavily traded than gold or silver. And normally the spreads are quite big. If you trade it, for example, on the MetaTrader 4 platform, you're normally paying approximately about a 30 to 40 point spread, which means you get a much worse price than you actually want. But trading it on binary, you only need the price to go higher and close higher by a short margin in order for you to win the entire payout. So it can be quite lucrative to trade platinum and palladium on binary.com without having to pay big spreads, which you would normally have to do on the MetaTrader 4 platform. So with that said, I do see it starting to break out here. It's broken out of a pennant, key support, oversold condition as well. So it's getting bid back up after this oversold condition, and we're seeing a bit of a pop to the upside today. Look for more follow through. 900 zone has been key here for palladium. Also for platinum. Also palladium has got some nice support here. We've come back down for a retest of the 50-day moving average, which I'll just make a different color so you can see it more clearly. So if we have a look at the 50 MA, you can see we've just come down for a bounce of that level. And it's been quite supportive. I wouldn't normally just say you should look to buy just off one indicator in particular. You want to look for confluence and also do your research on that market and make sure that you've got the fundamentals on your side as well. But it can't be ignored on palladium right now, the fact that it does tend to find a lot of support. Again, I'll just make it a little bit more clearly for you. It does find a lot of support around the 50-day moving average at the moment. So certainly traders are looking at that level. You can see we've had quite a few bounces over the last week. You've got a trend channel. It's starting to build some support. It's not far away from its 18-month highs here. So again, have palladium on the radar too, as well as gold. And silver, I'll go back to gold because it's starting to ramp up again. So we'll just have a look at that. Silver as well. It's not far off. So gold here, if it can break through 1,200, about 32 to 33, then it should be up and running. I suspect we'll keep going until about the 1240 zone. Then you've got a lot of resistance there. And probably if gold does manage to break out further today, I would suspect it will run out of steam once it gets up to that level. Normally, gold doesn't move much more than about 200 points in a single day. Day to day anyway, apart from major news items. That move that we had previously was a 200-point move in one day, going back to last week's FOMC statement. How much has gold moved already? It's moved about 62 points from high to low. So let's say it can make it all the way up to here. 150-point move, that could be doable if it can build up some pressure today to the upside. And I would also look at the potential with silver as well here as well. Silver's getting going now, 1646. Again, if we have a look at silver, it needs to do a little bit more work here to break above this consolidation, but it's at its daily highs at the moment. Also, the US dollar continues to sell off. I would be a little bit mindful that the US dollar could come into, there is a weekly pivot. We've got some moving averages, most notably the 200-day moving average. What could happen later on in the session, but it really depends on additional data and comments from the FOMC members as well, is that it gets bid back up into the close, produces a hammer, so it's just a short-term move lower. So just be a little bit nimble if you're trading within shorter time frames. I'd look to just kind of be nimble on gold and silver, getting in and out, just in case US dollar gets bid back up into the close. Therefore, gold and silver will sell off into the close or pull back a little bit. So I would just be faster to get in and out of trades at the moment on gold and silver until they fully confirm on a weekly closing basis as well. Also moving over to oil. So what a move oil has had over the last week or so since this capitulation. So oil looking quite interesting at the moment. Let's have a look. We can look at a few different zones here. So first of all, oil on the weekly chart did some damage last week. It broke through a major underlying trend channel, really overshot, 7% move to the downside on Brent crude oil. You can see here it's producing an inside candle on the weekly chart, which means just basically this is price action over this week is inside the high and the low and the close from last week. And if we close with a hammer like this on the weekly chart, has the potential to follow through more to the upside next week, or it could be a goodbye kiss. It could be just testing this recent previous resistance channel only to have another move lower here as well. So we continue to watch the price structure. There's definitely this capitulation formation, V-shaped reversal pattern, definitely oversold short term. It really took out a lot of participants in this breakdown in price. So the stop losses likely were getting triggered to cause it to really accelerate to the downside so fast last week. A 7% move to the downside in 1 week is quite a lot, even for oil. But we've seen a retracement, 3% retracement already. Oil looks to be on the brink of a potential breakout at the moment, so I would just be mindful of that. You might be able to catch an opportunity short term here on oil as well, again in and out before likely the Baker Hughes report coming out later on today at 6 o'clock. So you're looking at really 1, 2, 3, 4 hour trades or 3 hour trades on oil at the moment. If it breaks above yesterday's high, I suspect momentum to the upside will continue. We've done some confirmation with regard to this breakout that we saw on Wednesday. The oil inventories were down the stockpiles, which meant that we saw a bullish breakout for oil, and that's continued to follow through. It's been a little bit choppy here over the last few days of oil. Yesterday and today, it's kind of battling around resistance right now. You can see here on a raw chart more cleanly the move that we're looking for. I would anticipate the potential, if oil can break above, and this is going back to Brent crude oil, the 51 about 30 zone here. Okay, this level of resistance, let's just notch that up slightly, then we'll shoot up towards the monthly pivot here as well, and I'd look for a retest of about 53.20. So that's probably about a $2 move here for oil if it can break above the yesterday's highs, break above the daily high. That's the key level I'd look for follow through, and you could take advantage of a short-term trade there. It's been quite an impressive move. Also next week as well, if we do close the week with this hammering inside candle, you can see actually if we go over to the daily chart where although we've got major trend channels, we are essentially range bound at the moment, where oil is relatively good value short term around $47 per barrel, and it gets oversold when it gets towards $60 per barrel. We are moving within that range. Interestingly, oil where it's sat or where it's rallied from has been the points where previous OPEC meetings going back to November last year and also September, this has been the point where we've seen buyers come back in around $47 per barrel. It's been an important level. Then we've seen these rallies back towards 55 zones. So we're within that level at the moment. Obviously, the OPEC meeting is only about 2 weeks away in Vienna. Often you start to see oil get bid back up in anticipation for that meeting, although OPEC probably need to do something quite special in terms of cutting production, coming to a further agreement, not just extending it by another 6 months, but actually doing something more concrete, which will cause oil to go higher in price. So we'll see what happens. We'll see what speculation is in the markets prior to that, what sort of news items are coming out in the lead up to that OPEC meeting. But overall, it's been a capitulation move here, bit of a classic move here, and it's a V-shaped reversal pattern on the daily chart. And on the weekly chart, you've also got the potential for more upside. Again, with trading this normally, for example, on a MetaTrader 4 platform, you need relatively big stop losses where the price of oil is at the moment, unless you catch it aggressively near the lows here. Getting in right now really favors something like the binary toolbox. So utilizing higher and lower trades. If we break above the previous day's high, for example, I'd be looking at a trade, just short-term trade, to be higher and get in and out of the trade prior to the Baker Hughes report coming out later today. So it tends to favor fast trades, fast moves at the moment with both UK oil and US oil right now. So looking at the monthly chart here, I mean, that's quite a large rejection candle to yeah, actually, it's quite interesting. Actually, if we look at this, even though it's broken and done some chart damage on the monthly chart, if it does ultimately close, I mean, we're only 12 days in, but if it does ultimately close back within this trend channel, it's actually, although it's breached it, if it closes back within it, it means oil is respecting that channel. And you can get this sometimes, even if you go back to the beginning of the year here, back in January, February 2016. although it broke down significantly and did chart damage, it retraced into the close, produced this new channel here. So on the monthly basis as well, if we form a really strong rejection candle on the monthly, could be quite a nice trade to take into the summer months, where usually oil is bullish over June and July. Of course, that seasonality by itself is not enough to warrant a trade, but we are in a key underlying level trend channel here. So maybe even longer term, this could work out to be quite a nice buying opportunity for oil. But again, it's not just a technically driven market, it's fundamentally driven. The monthly OPEC report came out yesterday. Oil inventories comes out every week. And in fact, again, if you'd like to find out more on that, you can join us for future webinars. And also, I will just put that into the chat shortly for you as well. If you enjoyed today's analysis and you'd like this on more of a regular basis, if you want to join our live trading rooms during the week, know the exact trades that we are taking, our exits, our entries, our trade management, get kept updated on all of our trades throughout the week via trade alerts. We notify you exactly what we are doing, our trade management, our entry, exit. You get updates to all of our reports, and you can get access to our private members academy, where we share a lot of resources with you. So again, guys, if you'd like to take advantage of that, and if you enjoyed today's session, you want more of this on a regular basis, all you need to do is go across. I'll put the link in the chat for you. It's www.jointhegoldandsilverclub.com. Okay, www.jointhegoldandsilverclub.com. I'll just talk you through what you get by being a member. Here's the link again to get exclusive access to our live trading rooms. As a member of the Gold and Silver Club, you get access to the following. So you also get our trading strategies, our online training course. You can log in to view all of that via the private members academy. You get access to our live trading rooms during the week, which are also recorded, and our week ahead trading plans as well, live trade setups, which we provide to you, all of our exact entry, exit. We essentially tell you exactly what we're doing, the moves that we're doing in the market, entry, exit, take profit, everything is provided for you. We provide you with the inside track to the week ahead trading plan. And what's this for the week ahead? You get access to our Private Traders Academy members website, as well as notifications about breaking news and all the trades that we are taking as well. So again, guys, if you like access to that, all you need to do is go across to www.jointhegoldandsilverclub.com. Okay, fantastic. So I wish you all good trading for today, and yeah, I hope you have a fantastic weekend, guys. We'll definitely catch you here on the next one. Very much look forward to work with those of you who make an application to join us at the Gold and Silver Club. All the best. I hope you enjoyed today's session, and we'll catch you on the next one. Okay, thanks everybody. Take care, and thanks of course to binary.com and the team for hosting today's session. Thanks, guys. Take care. Bye bye.